which gives its verdict on those Bank of England plans we heard yesterday to calm the housing market. Hello again, Tanya.
Hi there, Sarah. Well, shares in Barratt Developments and Persimmon were both up by around 5% after the bank's Governor Mark Carney announced a cap on home loans and tougher checks by banks and building societies. John Stewart is Director of Economic Affairs at the Home Builders Federation. Its members deliver 80% of new homes built each year in England and Wales. John, so first of all, your reaction on behalf of your members to what was announced yesterday.
Good morning, Tanya. Well, I think we're fairly relaxed about what's been announced. The Bank of England has stressed, and the Governor has stressed, that the impact on the housing market and on lending will be very minor in the short term. And what they've done really is take out an insurance policy against things getting out of control in the future. They're looking at forward house price inflation and forward lending trends and so on, and saying, well, if things get a bit out of control, we're going to take action now as an insurance policy.
But it perhaps wasn't the measures that were so important, because, as you say, they could have been tougher, but the underlying message was there, wasn't it?
It was indeed, and this is very significant. What's going on at the moment, of course, was we for a long time, for several decades, had a situation where it's very difficult to control the housing market separately from the economy, but we now have a situation where the bank and the Financial Policy Committee have a range of tools where they can rein in excessive lending and protect financial stability separately from managing the British economy, and that must be welcome.
If we have a situation where we saw house prices, should we say, become rather fragile, there are plenty of anecdotal evidence to suggest that's already happening in London, how do fluctuations in prices affect your businesses?
The key feature of house building in this context is the very long leads and lags involved in it. From when you first look at a site to going through all the process of designing a scheme, getting planning and starting to build them and selling the last unit can be many, many years. And of course, if during that process, during that long period, house prices shoot up or shoot down, that can have a devastating effect on the finances of the scheme. So the industry fundamentally needs stability. And of course, we haven't had stability for a very long time.
Right. But an underlying sense of confidence, which would be derived from confidence in the performance of the UK economy, a confidence that interest rates are not going to go shooting up in the short term. Is that present?
I think it is. I think house builders are certainly concerned about the fragility of the housing market. If you read the press, you'd think that the housing market is roaring away, but actually when you talk to house builders, they say things are not quite that. There's no bubble, there's no boom, and that the housing market recovery is fragile. So the bank needs to tread very, very cautiously, and what it says is as important than what it actually does. And I think what it's said and done in the last 24 hours has actually been very cautious, and therefore good for the housing market and good for house builders.
John Stewart, Director of Economic Affairs at the Home Builders Federation. Thank you.
Thanks, Tanya. 7:20. The BBC has been examining its own entrails again. We do quite a lot of that, quite right.